Hello everyone, and welcome to this presentation of the one chart pattern that can make you successful. Now in today's educational presentation, I'm going to share with you a very simple but powerful technique and chart pattern that can generate setups such as this, and this, and you'll be able to know exactly where those setups are once I teach them to you in just a few moments. Welcome, my name is Steven Primo. I am the president and founder of Specialist Trading, and as you can see, we are an educational company. Our only goal is to educate you as traders so that you can hopefully elevate your trading to the next level, that of being a consistent trader, because it's our experience that consistency is really the name of the game. No fly-by-night strategy or system will sustain you over the years. I've seen millions of traders make tons and tons of money and then lose it all from some flash-in-the-pan system or strategy. No mentor will have you, copy all of his signals and trades and have you successful in a matter of months. And no indicator will do that as well. It's been my experience in my nearly 40 years of trading that the only thing that will make you a consistent trader is sound fundamental knowledge that has stood the test of time, and then you becoming a part of the process. You making your own decision as to what you want to trade, what market you want to trade, what time frame, what's the perfect setup, and how you want to apply your money management. Because that is the only way one becomes consistent, not by following someone else's lead, not by taking signals that were generated on a nightly basis through some signal service, or by going to a chat room and finding out what everyone is doing. The only way you will become consistent is through sound fundamental knowledge and then making your own decisions. So this is our philosophy and credo at Specialist Trading. We provide you with all of these things. I've been trading for nearly 40 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. Now, if you're not familiar with what a specialist is, if you ever look at the old pictures, you Google up some old pictures of the trading floor with all the people making these weird hand signals and shouting, the specialists were those traders behind those large wooden podiums that made markets in roughly anywhere from 35 to 50 stocks. So if you wanted to buy or sell a particular equity, you had to go to the trader who specialized in that equity. So I did that for a total of 9 years on the floor. I traded through the crash of 1987 and the bull market that followed after that. I left the floor in the mid to late 90s to manage money and also to trade my own account. And about 8 years ago, I teamed up with Pro Trader Strategies and we formulated Specialist Trading. So as you can see, I've seen, traded, and been involved in just about every market environment, every market strategy or technique around. So I know what works in terms of consistency and I know what doesn't. So all I do at Specialist Trading is teach and mentor my students the same things that were able to sustain my trading. I struggled my first 2 years of trading. I've made no secret about it. And these are the things that turned my trading around through what my mentors taught me, and that's what I hopefully try to instill in all of my students. Now, today I have a great technique in this chart pattern, and I'll show you exactly how you can apply it to your particular strategy as soon as we get into today's class. But before we do, we are required to show you our disclaimer, so please take a moment to view this. I'm going to show you a lot of performance results using this number one chart pattern, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a brief moment to look at that, I would also like to take this time to invite each and every one of you to follow us on Twitter if you haven't done so already. You might want to copy down our handle right there, the abbreviation for Specialist Trading, at SPCLST TRADG. Each day I post different tidbits of information, anywhere from setups that occurred in one of our strategies to actual bits of wisdom along the market. Although it is rather limited because of the way Twitter is formatted, so if you'd like to get more detailed information about myself or about what we do or about Pro Trader Strategies, which is my sister site, you can go to Facebook. And Pro Trader Strategies has put together a Facebook page there, and there's a lot more detailed information, a lot of videos, educational information there to find out more about what we do. Okay, so lots of ways to learn about Pro Trader Strategies as well as Specialist Trading. Now, as I stated just a few moments ago, when I first started trading nearly 40 years ago, I struggled tremendously. Even though I was on the floor, and someone would say, "Well, boy, you had access to all this inside information and all the news events, and you saw the book there in front of you. You knew where the orders were. How could it be that you lost money? I thought you would just be making money hand over fist." That's not true because I was doing all the things that everyone had taught me to do. Looking at support and resistance, Fibonacci, looking at order flow, at volume, listening to all the news, looking at all the indicators, and nothing seemed to work in terms of consistency. I was lucky enough to have some mentors on the floor. These were specialists as well who had been trading about 40 or 50 years each. And they took me aside and they said, "Steve, trading should be non-subjective." And I looked at my trading and I realized that, yes, it was very subjective. I was looking at the news events and trying to come up with some type of idea as to what it meant. It was just far too subjective. And someone would listen to a news event and say, "Well, that's very positive." Someone else would listen to the same news event and say, "No, that's terribly negative." So there was too much interpretation. And they also said that trading should be consistent, meaning that you shouldn't be looking for home runs. I mean, every once in a while they will happen, and so many websites and educators promise you the world with thousands and thousands of % a year, but you shouldn't be looking for that. What you should be looking for is a trading plan or technique that is consistent, meaning it has a 2 steps forward, 1 step back approach, meaning that we know every once in a while you will have a small loss. That's perfectly normal, but you will quickly recoup that loss and then go forward once again. So you want this more of a stair step type of approach to your trading as opposed to trying to go for the home runs, because you can just as easily lose money with those type of trading techniques. Now, my mentors also taught me that trading should be as simple as possible. So look at your own trading plan. Is it constructed based off of convoluted logic, tons of indicators, looking at every single news event, listening to outside sources so you can have them tell you what to do? I'm saying this from first-hand experience because that's the way my trading used to be. It was tremendously, tremendously overcomplicated. And as my mentors taught me, most of your successful traders, the ones that are consistent, that have been trading 30, 40, 50 years, have trading plans that maybe have 3, 4, 5 rules, and that's it. If you look at people who have been trading for a relatively short time, 5, 10 years, which is really relatively short, their plans are extremely complicated. So scale back on all this useless noise, what they told me, adding too many things to your trading plan. Keep it as simple as possible. I only look at one screen in front of me. I only look at one chart at a time. My strategies have maybe 1 or 2 indicators, and we don't look at any news. We don't look at any economic events. We don't listen to anyone in a chat room or a trading room. We keep things as simple as possible, and I think because of these things, I've been able to sustain my trading for nearly 40 years. Now, here's what you're going to learn today. And before we get into that, I just want to say that since this is a class and we are an educational company, remember, our only goal is to teach you, not to give you signals on a nightly basis or not to tell you how to trade and what market to trade or time frame. We really want to teach you. So this is going to be conducted like a class. If you have any questions, I want to hear them, but kindly wait till the very end of the class, okay? The format will seem to run a lot smoother, and I have a ton of examples to show you how simple it is to apply this technique today, and I don't want to slow down the process. So we'll go on for about the next 20, 25 minutes, and then we'll take questions then, okay? The only question I will answer is the most popular one, and that's what people always ask: is this being recorded? Yes, it is. We record all of our weekly educational webinars. If you have technical difficulties or if you have to leave early, go to Pro Trader Strategies. They are the people that put on the event. They are my sister site, and they will send you a link to this recording, okay? All right, so let's begin. Here's what you're going to be learning today. We're going to talk about the truth about formation patterns, all right? Since we're going to be sharing with you what I feel is the #1 chart pattern, I'm going to go into the truth about all the other formation patterns that most traders rely on. We're also going to talk about the truth about candlestick patterns. Now, we have nothing against candlestick patterns. In fact, we incorporate them in a lot of our trading plans, but I'm going to share with you the truth about them, the way most people apply them. And then lastly, we'll go into the #1 chart pattern that can make you successful, okay? This is extreme. You're going to see how simple it is. I talked about keeping things as simple as possible. You're going to see how simple this is, and you're almost going to think it's a joke at how simple it is, but then I'll show you tons of examples at how well you can apply this chart pattern to any method, any technique, or any way you are currently trading in any time frame or direction. Now, if you don't happen to have a plan, we'll show you how to apply that as well with one of our most consistent strategies. But let's talk about formation patterns, okay? This is the way most people trade technical analysis. I know I started trading this way, and there are tons of different patterns to look at. But as we start just going through the list here, here is an ascending triangle, okay? What this is kind of a consolidation pattern where price continues to bump up against some type of so-called resistance, and each time it makes a low, it makes a higher low. Eventually, conventional wisdom tells us that we will break out of this, and this will be a positive pattern to go to the upside. This is an ascending triangle. Now, conversely, a descending triangle is the exact opposite. We have some type of so-called support here, and we'll hit the bottom, come up and make a high, hit that bottom again, that support, and then come up and make a lower high, and eventually once we break through that, that's where we go lower, okay? That's a descending triangle. Another popular formation pattern is an ascending wedge. Now, conventional wisdom tells us that you make this type of wedge pattern, and once this is violated to the downside, it's usually followed by a strong, steep decline. Conversely, a descending wedge is the same pattern, just turned upside down. Once this is violated to the upside, you usually have a very nice upward move. And here's another pattern that most people love to look at, the head and shoulders, probably the most popular formation pattern there is. It's basically a three-top pattern where you have the left shoulder, a higher top, meaning the head, and then a right shoulder. Now, this is usually the neckline, and once that is broken, that's usually calls for a downward move, okay? Now, here's the problem with all of these formation patterns. Here's the truth about them, is that they're very, very subjective. They're not cut and dry. In other words, one person will looking at these patterns and say, oh, that's an ascending wedge. Someone else will say, no, that's a head and shoulders. Remember, we want to keep things simple and we want to keep things consistent. And there's no consistency in these patterns because they're too subjective. Let me show you what I mean here. Here's a current, or I should say an older chart of a head and shoulders, because someone looking at this would say, well, you know what? I've gone to the webinars, I've read all the books, and I come to the conclusion that we have a head and shoulders top here. We have the left shoulder, a complex head right here, and then we just had the right shoulder formatted. So we should be having a nice steep decline, probably flirting with these old lows. So you decide to sell, and that's your point of selling right there when you break that ascending neckline. And look what happens. It goes right back up and you're most likely stopped out, right? Okay, so this is the way it usually happens, but then you're still giving yourself a few more chances. You think maybe you jumped the gun just a little bit too early, so you wait, and a week later, you see this formation again in the same stock or the same future or currency pair, and you say, wait a minute, I kind of jumped the gun there. This is the actual head and shoulders. All right, we have the left shoulder, the complex head formation, and then the right shoulder. So I actually should be selling right now because this is really the formation I was looking for. So you decide to sell, and look what happens. It goes even higher again, and then you eventually get stopped out once again. Does that look familiar to anybody? Do you see how there's too much interpretation here? All right. Now we can also see this in support and resistance. All right. Support and resistance is a very, very popular way people like to trade. There are a lot of programs, a lot of online courses that just deal with support and resistance, and they have their own platforms where they look at volume or what the institutions are doing to tell you where the resistance is and where the support is. Okay, this is a very, very common way of looking at support and resistance, but if we go to real world and we see this example, well, this looks like the same chart we were just looking at. We have support, support, resistance, resistance. So if we're in some type of nice trend, well, we obviously want to buy here at the support if price comes down here again. And this is our main support down here. So as price starts to descend, that's where you want to buy. So we watch this chart, and it kind of goes there through like a knife through butter. So we bought there, and we think, wow, what happened to the support? Well, maybe this is the real support down here at the lower level. So I'll double up and buy some more down here. So you buy again, and then look what happens. What happened to the support? Okay, it fit all the requirements. You know, the volume was there. All the institutions were buying. Where did they go? Okay. Too subjective. There's no consistency. I'm not saying it doesn't work, but remember, we want things to work with a two-step forward, one-step back approach. And most of these techniques have a one-step forward, two-step back approach. I'm sure there are many out there in the audience today that can totally agree with me. But it just doesn't stop there. We can go to another form of trading extremely popular, which is candlestick patterns. Okay, now once again, we have nothing against candlestick patterns. We incorporate them in some of our strategies, but we feel we use them the correct way. Here's the way most people apply them. If we look at this entire list here of the most popular candlestick patterns, let's just view one, which is the engulfing pattern. That's the most popular as well as easiest pattern to spot. And it's a 2-bar pattern where bar number 2 simply engulfs the range of bar number 1, as we see right here. Now, bar number 2 opened and then closed higher. So this positive day engulfed the previous negative downward move. So this is a very positive sign here. At face value, this is the way conventional wisdom tells us that this is a very bullish sign. So you jump in and buy here based off that, and look what happens, okay? Look familiar once again to anybody. This is the way most people trade candlestick patterns, all right? No consistency in the conventional way that most people are taught. Trust me, I've been trading candlesticks now for over 35 years when I was first taught them on the trading floor. And when I first started trading them, I couldn't make a dime. There was no consistency. So, as we said in the beginning, okay, furthermore, trading should be non-subjective. Most of these patterns are extremely subjective, okay, as I stated. Someone could look at a pattern and say, no, that's very bullish. Someone else could say, no, that's a bearish pattern, all right? And they're not consistent. Trading should be consistent. As you see, there's no consistency in these. Now, I know there are some traders who are able to do very well trading these patterns and candlesticks, but they're probably the minority of all traders, probably 1 or 2% of all traders. The rest of us, myself included, aren't able to trade these consistently. And lastly, they should be as simple as possible. If you're having trouble trying to discern if you're in a upward wedge or an inverted head and shoulders, that's not simple. There's too much discretion involved. There's too much thought process going involved, okay? We want things that are cut and dry. So this brings us to the number 1 chart pattern that can make you successful. This is a chart pattern that you can apply to any strategy. It doesn't have to be one of mine or one of my techniques. You can apply it to your current strategy, but I really feel once you understand it and once you know how to apply it, you will increase your odds for success. And you're going to almost laugh here and think this is just too simple, but trust me, we use this pattern in about 3/4 to 90% of all of our trading techniques. And here it is. It's this. Regardless of whatever time frame you trade, regardless if this is a tick chart or a monthly bar, what you want to do is find a bar that closes in the top quarter of its range. So in other words, if we take the extreme high and the extreme low, we divide it by 4 separate but equal parts. If we close in the top quarter, well, what is that telling us? It's an indication that price is about to go higher. It's that simple. I mean, we want things cut and dry. It's right there. There's no discretion there at all, okay? There's no discretion. It's very simple. I can't think of anything more simple than that. And it's very consistent. I'll show you in just a few moments how consistent this is. Now, conversely, we look at a bar like this, okay? We take the range from extreme high to extreme low. We divide it by 4 separate equal parts. And if we close in that bottom quarter, well, what is it telling us? It's telling us that it's an indication that price is about to go lower. Now, what a great pattern to tell us, to give us an edge about what the market is about to do. Now, where most of my students have difficulty with this is they say, well, Steve, I only trade candlesticks. How does this apply to candlesticks? You know, the trouble with candlesticks is that people think you apply them differently. There's absolutely no difference. In other words, the top of this range would be the same as the top of the candlestick wick. And the bottom of this, where we close, would be the bottom of the wick or the close of the day. For instance, if we just look at this candlestick bar, it's the same thing. You take the extreme high and the extreme low, divide by 4, and you close in the top 25%. That's an indication that price is about to go higher. Conversely, if you look at this candlestick, all right, you take the top of the wick to the very bottom where we close, divide by 4 from the very top to all the very bottom, and that's an indication that price is going to go lower. So there's absolutely no difference what type of bar you trade. It makes no difference. You just take the extreme high, the extreme low, divide it by 4, and this is not rocket science. You'll be able to see this, you know, in a matter of moments, whether you close in the bottom or top 25%. I'm sure you're all asking, why is this chart pattern so successful? It's too simple. I mean, how can I apply this? What, you know, it just seems silly to me, okay? Trust me, I thought the same thing when my mentors showed this to me nearly 40 years ago. But my mentors taught me something that was very difficult to grasp in the beginning, but now it's made the entire difference in my trading career and in my trading life. I really feel it's sustained me. And what they said is, Steve, the reason why most traders fail is because they're listening to something else other than the market. In other words, they're listening to some guy in a chat room. They're listening to some guy on TV that's supposed to know everything. They're listening to all these news events that are supposed to tell you what the market's going to do. They're listening to tons of indicators that are supposed to tell them what's going to happen. But the only thing they're not listening to is the chart in front of them, is the market they're trading. And that's where everything comes from. So that's the only thing you should be listening to, okay? So when a price bar closes either at or near the top or bottom of its range, the market, the only thing we should be listening to, the market is giving you a clue as to which direction it wants to go. I mean, what a fantastic clue to have. Not from some so-called trading guru in a webinar, or not from some so-called trading expert in a chat room, but from the market. The only thing you should be listening to, it's telling you, hey, you know what? Most likely I'm going to go higher or lower. You may want to jump on board. Okay, so we see how powerful that is, but how can we implement this chart pattern? Well, what we've done with this chart pattern, what was expressed to me, once again, some 40 years ago, was one of the best strategies we have in terms of consistency. It's strategy number 4. And it implements this chart pattern. This is our setup bar. We need to find this bar prior to entry. All right. So this strategy is based off of specific, pattern recognition that we're looking for, and this is involved in that pattern recognition. But if we do not see a bar closing in the top or bottom 25% of its range, the strategy is not valid. It cannot generate a valid signal. That's how powerful this is. We've incorporated it in one of our most popular as well as consistent strategies. We have hedge funds trading this strategy. We have people that just started trading last week that are trading this strategy. In over 100 countries around the world, in virtually every state in the country. So it's extremely popular and it does very well. You can do a Google search, see how well people are trading strategy 4. You can also go to my website or Pro Trader Strategies and see all the testimonials from people who trade this strategy. Now, here's the good news. I'm going to give you 2 of the rules to this strategy today. It only has a total of 5. I'm going to give you 2 of them today. All right, so let's say you're looking for a buy setup, all right? You're going to look for bars, obviously, that close in the top 25% of their range. And at the same time, that bar must close above the 50-period simple moving average, okay? That's it. That's how simple it is. Now, if we're looking to sell, well, we're going to look for bars now that close in the bottom 25% of their range, but at the same time, that bar must close below their 50-period simple moving average, okay? That's it. But let me show you how powerful these simple things are. Remember, my mentors taught me to keep things as simple as possible. I've been using this strategy going now over 30 years, close to 35 years, and it's one of the things that has sustained me in trading virtually any market, any time frame, and in any direction. I'm going to show you a bunch of examples. Remember, once again, if you have any questions, kindly wait till the end of the presentation, and then I'll go over all of them, okay? All right, let's start out. Let's look at this chart of WYN, okay, in March. As we see here, we closed in the top 25% of its range, the very top of its range, and it's above the 50-period moving average. Now, obviously, there are some other bars here that close in the top 25%. This one did, and this one did as well, but they do not meet all the other requirements of the strategy. So you're going to see some other bars as well, and you're going to say, well, Steve, why aren't those buy setups? Because remember, we have 3 more rules that need to be met. Unfortunately, I can't divulge what they are right now because that wouldn't be fair to the people that have spent good money purchasing our strategy number 4 course, okay? But just to show you that this was a valid signal that was generated, and using the things I've taught you today, the stock went up 4 points in 1 week, okay? Not bad, okay? You could have had a nice little trade there. Now we look at the letter Q here. This was just a little over a month ago. Once again, we're closing in the top quarter of its range, and we are above the 50-period moving average. And it meets the rest of the requirements of the strategy. And now this stock went up 6 points in 2 weeks. Okay? Do you see how the market is giving you a clue that it wants to go higher? You don't need to listen to any news, because how many times have you heard a positive news announcement and the stock or the market goes straight down? Okay? Because of these rules here, we've formulated a very consistent strategy for you to trade based off of what the market's telling you, not anything else. How about DVA? Well, we're going back to the end of the year here. This was on the 30th of December. This is actually 2015, not 2016. But as we can see here, we have a bar that closes in the bottom 25% of its range, okay? In the bottom 25, and we are below the 50. Here is the 50-period moving average. So this meets all the requirements to go short. So look what happened. The stock went 8 points lower by the end of the month. How about CVX? Well, we're going into just about a month ago. This was in CVX. We are closing in the top 25%. We're above the 50, and all the rest of the rules are met. Remember, this is a clue now. With the remaining rules of this specific strategy, the market is telling us it wants to go higher. All you have to do is enter, and 9 points in 3 weeks, okay? Just based off of a pattern that the market is telling us, nothing else. Now, BDX, this was on the 18th of March. We obviously closed in the upper range of this particular bar. Remember, we have other bars that did as well, but they did not meet the requirements of the strategy. This one did, and the requirements are extremely simple. As your mentor in the course, I teach all of this to all of my students, but it's extremely simple to learn, and we are above the 50. So on the 18th, this generated a buy setup, and the stock went up 12 points in 1 month, okay? Now remember that chart I showed you at the very beginning? Well, they were all based off of the #1 sharp pattern, okay? On the 24th of March, we closed in the top quarter of the range. We're above the 50-period moving average. It meets all the requirements, and we go higher for the next week. Now we have another signal that's generated about 3 weeks ago or so, maybe a month or so. Closing the top, we're still above the 50, and we go even higher, and then a last one generated a week or so ago, and we go higher for a total of roughly 12 points in 1 month. As you see, at the very beginning of the presentation, I showed you this chart saying how you could take advantage of buy setups here, here, and here. And if you look at all these setups now, where is the bar closing? At the top of its range, and it's above the 50. The remaining 3 rules, once again, I apologize, but I can't divulge them to you right now. They're extremely simple as well. If you thought this is simple, they're just as simple. ENDP, okay, this was in February and in March of this past year. We are below the 50-period moving average. We have 2 bars here that close in the bottom quarter of their range. So they're both generating valid sell signals according to the entire rules of the strategy. And the stock went down 28 points in 2 months. Okay, not bad, right? Just based off what the market is telling us. Remember, it took me a while to grasp this concept, but once I did, I really realized that over 3/4 of the time, I'd say close to 80–90% of the time, the market tells me everything I need to know if I just know how to listen to it. But for some reason, we're all taught that we should never listen to the market. We should only listen to what some guy is saying in a chat room or a trading room, or we should only listen to the pundits on TV. Or we should have a ton of indicators and only listen to them when they all line up, okay? That's the way I was taught, and that's why for my first 2 years of trading, I really couldn't make ends meet. It wasn't until I learned how to listen to the market and shut out all of that useless noise that I started to become consistent in my trading. And this is the style, this is the philosophy we want to instill in all of our members. Once you really fully understand that everything comes from the market, you never have to ask anyone, what do you think about this stock? Or what do you think about this market? Or what do you think is going to happen? Or what does that news mean? Because we don't focus on any of those things. Everything you need to know is in front of you, and now you know the answer. Remember, our philosophy is the only way to become consistent is by you making your own decisions, not relying on someone telling you what they think the market's going to do or what a certain stock's going to do. So you should never, once you're a student of mine, you'll never ask anyone what they think of a stock or what they think of the market. You never should, because you now know yourself and you make your own decisions. Now we can also apply this to ETFs. As we see here, this is IWM, the ETF of the Russell 2000 index, okay? It mirrors the Russell 2000. So even if you didn't want to purchase this stock, you could just get a market indication from this. Now, in just about a month ago or two ago, in March, IWM generated a buy signal. We closed at the very top of its range, and we're above the 50-period moving average. So the market, not some economic indicator, not some jobless claim or some a news event or some economic condition, but the market is telling us you may want to come on board because I'm going most likely higher. And as we can see, the stock went up 8 points in 1 month. And we can apply this to the QQQs. This was a little earlier in February. We closed in the bottom 25% of our range, so the market is giving us an edge, telling us it wants to go lower. And because we are below the 50 period, the market is telling us that the overall trend is down. So we have two things in our favor that most likely the market will go lower. We just have to meet the other requirements of the strategy, and eventually the stock went down 8 points in 1 week. QQQs are the ETF for the NASDAQ index. Now we can also apply this going back just to regular stocks. On the 7th, just about a month ago, a buy setup was generated in RRC. The requirements are all met, and the stock went up 10 points in 3 weeks. Now we look here at Apple. Once again, we have a typo here. This should actually be the 30th, 12/30 of 2015, not 16. And we have a sell signal here at the very last day of the year. We closed at the bottom 25% of its range. So right there, the stock is telling us I'm most likely going lower. So don't even think about buying. And we are below the 50-period moving average. So the market is telling us once again, we're listening only to the market. We're not looking at economic reports or earnings or new products. We're only listening to the market. And the market is telling us that the overall trend is down. So if the overall trend is down and we're closing in the bottom 25%, why would we even consider buying anything? We already have two of the rules met that are telling us to go short. So that was at the last day of the year last year, and the stock fell 14 points in 1 month. We look here, here's another one on the 30th of 2015. STT meets the same requirements. It's screaming that it wants to go lower, and the stock fell 15 points in 1 month. Now, I know a lot of people are saying, well, Steve, yes, that was really easy to go short these stocks or to buy puts if you wanted to, because the market fell out of bed, if you remember, the first month of the year in January. So no wonder these worked out really well. Well, of course they worked out well. And did anyone tell us, did someone call us up in advance and tell us to go short because the market was going to go lower? No one knew the market was going to fall out of bed like that. We were just listening to the individual stocks and to the individual markets. So of course we did well because we were listening to the market. It wasn't as if everyone had advance warning that the market was going to fall out of bed in January. We were just listening to the market because the market told us in advance what it most likely was going to be doing. Now we can also apply this to very inexpensive stocks as well. This was just a month ago in GNW, actually about 3 weeks ago. It generated a buy signal. We closed in the top 25% of our range right here. And we closed above the 50-period moving average. So even though this is just a $2 stock, the same rules apply. We don't have to change anything because we're at a much lower price. So that was a buy signal generated just about 3 weeks ago, and the stock went up 100, or I should say 1.5 points in 3 weeks. But that's a gain of 50%. Okay, so you just made half your money roughly if you held it for the entire 3 weeks. Now that's a $1 or $2 stock. You can also apply this to a very expensive stock, $200 or $300 stock, all right? Once again, on the 30th of December 2015, we had a sell signal generated in LinkedIn. Now, this is a very expensive stock, roughly $240. We're not saying you can short that. Most people wouldn't short that. I totally agree. I probably wouldn't either, but I would certainly buy puts if I really wanted to go short it, or use some type of option strategy to go short, which many of our members do. Now, this was on the last day of the year, and the stock dropped 120 points in 2 months. Obviously, some news came out later on in February, which caused the stock to really gap down. Did we know that? Did the CEO of the company call me up one night and say, hey, Steve, tell your members to go short because there's some bad news that's going to come out. And so I really like your company. You guys seem like a bunch of nice guys, so I'd like you to be short. No one told us that. We don't listen to outside news or events. We just listen to the market. And the market was screaming on the last day of the year to go short LinkedIn. Now this happened just the last week in STX, okay? The stock had gapped down. It was originally above its 50 period, so we were looking for buy setups, but none were generated, and then we gapped lower. So now that we have consistent closes below the 50 period, the overall trend is down. The market is telling us we should only be sellers. Now someone at this point would say, well, Steve, how can we be sellers? This thing really gapped down. It looks like we're making a really nice base here, okay? All the volume has picked up on the buy side. And I get my institutional report, and they're all buyers at this level. So I really think I should be buying this. I know your stuff is supposed to work, but everything I've ever been taught says that this is a really good support level. And it's coming to a Fibonacci number here that we should all be buying at, okay? Remember I said in the beginning, trading should be non-subjective, and it shouldn't be based on what anyone else or anything is telling you. It should only be based on what the market is telling you. So because we're below the 50 period moving average, what is the market telling us? It's telling us that the overall trend is down. And because we closed in the bottom quarter of the range here, what is the stock telling us? It's telling us that it wants to go lower. Now it met the 3 remaining rules of the strategy, so we all jumped in just about a week or so ago, and the stock has dropped 7 points in the next 2 days. Okay, what happened to the support? What happened to all the institutions buying there? What happened to the support levels or the Fibonacci level? That stuff doesn't mean anything because there's no consistency. Sure, they will work every once in a while, but not over time. Every once in a while is not enough to sustain us. We need that 2 step forward, 1 step back. We realize we will have small losses from time to time. That's inevitable, and that's understandable. But we want to have something that's consistent. We don't want 2 losses, 1 win. 3 losses, 1 win. We want 2 wins, 1 loss, 3 wins, 1 loss. We want that approach. And that's what listening to the market does. As well, it's extremely simple. You see how simple this is, and most of you can start applying these tools right away. You don't have to, purchase some convoluted program to apply them, okay? So let's recap what we taught you today. We talked to you about the truth about formation patterns, all right? They're just far too subjective. Sure, they will work every once in a while, but most of the time there's no consistency in them. We also talked about candlestick patterns. The same way with candlesticks, we love candlesticks. As I stated, we have a couple of strategies that are generated just based off candlesticks, but we feel we use them the correct way. Most people use candlesticks incorrectly, and that's why there's no consistency. And then lastly, we shared the #1 chart pattern that can make you successful. It is extremely simple. It's 1 bar, that's all it is. But let's say you have a strategy that you feel comfortable with. It's not generating that great of success, but it's okay. If you apply this 1 bar, in other words, tell yourself that, let's say your strategy generates a buy signal, okay? Now before you just used to simply buy at the market whenever it did. Well, if you just apply these 2 techniques I share with you, if you get a buy signal, it must be above the 50 period moving average. And don't buy until you see a bar close in the top 25% of its range. We really feel you'll increase your odds for success just by adding these 2 simple edges I shared with you today. Conversely, if you get a sell signal, most people lose because their sell signals are above the 50 period moving average. So remember, if you get a sell signal, it should be below the 50 period moving average. Go back and look at your last 10, 20 trades. Most likely you lost because you were buying below the 50 period and selling above. We do the opposite at traders, all right? Remember, if you get a sell signal, that signal should be generated below the 50 period moving average, regardless of what strategy it is. I don't care what it's based off of. And don't enter to go short until you see a bar that closes in the bottom 25% of its range. I really feel confident that if you apply these 2 things to your current trading plan, you will increase your odds for consistency even more. You really have a high probability for success. Now, I know a lot of you are saying, well, Steve, the reason I'm here is because the stuff I've tried, I've spent thousands and thousands of dollars on techniques, on books, on strategies, on systems. Everyone promised the world. Everyone said I was going to hit a home run out of the park, and nothing works, okay? And I don't have anything that works. So how can I apply this? I don't have a current trading plan. Well, that's why we talked about strategy #4, okay? This is our most consistent as well as popular trading strategy. It's basically built for anyone. Okay, it doesn't matter if you're a hedge fund trader or it doesn't matter if you just started trading last week. We have all different types of traders with all experience levels trading this particular method. Remember, we are an educational company. Even though we teach you how to use these techniques and tools, we are more about supplying you with the information so that you can ultimately make your own decisions. It's our philosophy that is the only way you will become consistent. Not by, listening to signals on a nightly basis and saying, where do I buy? Where do I sell? What do you like? What do you think the market's going to do? Those basically are just the sayings of a gambling mentality, because it basically sounds similar to like, who do you like in the fifth? Who do you think is going to win the game tonight? What do you like today? That's like a gambling mentality. You're basically asking other people what they think because you're telling yourself, I have no idea. We want you to be confident about signals that are generated, and that can only come through sound education. That's why, as you see here, I'm a teacher, not a trader for you. I trade my own account, but I don't tell you how to trade. I just teach you the things that have stood the test of time. So here's our special attendee discount for you coming in today. We have a great strategy number 4 program for you. Remember, this trades virtually anything. I showed you a lot of stock examples today, but you can apply it to E-minis, the ETFs, the Forex markets. This is instant course access. You don't have to wait for anything to be shipped to you or applied to you. It's an online course. It comes with detailed instructions. We give you all the entry points, the exits, and stop placements. But remember, we give you a very amount of different entries, exits, and stop placements so that you can decide for yourself what you want to use, okay? It's up to you to decide. As educational purposes only, we supply you with 1 year of signal alerts, and these are only meant to be used as education, okay? In other words, to check your work. So if I generate a signal in ABC tonight to go long, you should be able to see that that was a buy signal, all right? It's only meant to be used as educational overview, not to be a signal service, okay? These are tons of video training lessons. This also includes, for educational purposes, the free add-on. That's the up and down buy and sell arrows that are generated when a strategy signal is validated, okay? Once again, you should be able to, and it's my goal as your mentor, to spot these buy and sell signals. But we provide you with these up and down arrows so that you can check your work once again to see if they are in key. And this all comes with my lifetime correspondence, all right? This is not something that expires after 2 weeks and then that's it, you're on your own. You can always contact me. As you can see here, it's our most popular as well as consistent strategy. Now, once you, as my student, we see that you're coming along and you're fully understanding the process, then we provide you with these signal alerts, and they're email alerts. As you see, here's an example of something that happened a week or two ago. We provide our different courses with different signals, and as you can see, you will be getting this on a nightly basis when signals occur, and it will come in this form. Now here's an example here in PRGO. This is strategy number 4, sell signal, that was generated on the 20th for entry for the 21st. If you're a standard trader, if you're more aggressive, you could enter. We teach you how to enter on the 20th. As we look here, here's the day the signal was generated, okay? The software automatically generated a sell signal to go short on the 21st. If you're the conservative trader, if you're an aggressive trader, you could have entered on the 20th, okay? As you can see, we're applying both of the same rules I just shared with you. We close in the bottom range of the bar, and we are below the 50-period moving average, all right? So this was on the 20th. This was an actual signal that was generated and emailed out to everyone in our course. And as you can see, the stock has dropped 30 points in 2 weeks. Now we realize it's, once again, an expensive $100 stock, and not everyone likes to short stock. But you could have easily purchased puts. Not all of our students even trade stocks. A lot of them purchase options, okay? So they buy directional options, or they have a positive or negative type of strategy they use. So the stock has dropped, coming into May here, the first couple of days of May, dropped 30 points. Obviously, once again, some news came out. We have no idea what it is. We don't care. We only listen to one thing, and that is the chart in front of us. Now we can also apply this to E-mini futures. This is, as you see in the lower left-hand corner, this was Monday, 2 days ago, the first day of May, all right? We are above the 50-period moving average in the E-mini futures on a 5-minute time frame. So obviously we are in an overall uptrend, and we are looking for strategy number 4, signals. Now, obviously, when you trade a smaller time frame, there's going to be more signals generated. So if we apply the add-on, look at all the buy signals that were generated on a 5-minute time frame. Now, it's up to you which ones you wanted to take. It's up to you where you wanted to enter, where you wanted to exit. It's up to you where you want to place your stop. Now, don't worry. This is not something you have to guess at. We teach you all these different variables. It's up to you to decide, though. We want to put the power in your hands so that you're not forced to rely on what someone is telling you how to trade. And lastly, if you're a currency pair trader, here's a signal that was generated last week in the euro dollar, okay? As we see here, this will work on candlesticks. Remember, it does not matter what the bar is. Don't get confused with thinking that the bar generates the signals. We're only looking at the range of the bar. And so the range of this candlestick bar would be the exact same range of your standard open, high, low, close bar. We simply measure it by 4 separate but equal parts, and we closed in the top 25%. We are above the 50, so those 2 rules are met. The 3 remaining rules were also met. Excuse me. So on the 25th, our currency pair traders would have known automatically that a buy signal was generated. And as we see here coming into May, well, we've gone up about 200 or 300 pips, or about $2,000 or $3,000 per contract. So this is our strategy number 4 course, our momentum trader. Once again, it is our most popular as well as our most consistent trading course. You see how well it works? All the signals I showed you in today's presentation were all generated using strategy number 4, including the last 3 I just showed you. Okay. Now, normally, if you saw something like this at a webinar or in a seminar, someone talking about it, you say, boy, this thing is so good, it must cost thousands and thousands of dollars, right? This must be, it's out of my league. This is, hedge fund traders are trading this. I probably can't trade something like this. Well, that's not true, because we made it very affordable for everyone, because we are an educational company. This course only runs for $6.95, and it comes complete with instant access, detailed instructions, all the entries, exits, and stops, and you have the 1 year of signal alerts, including the free add-on that automatically generates the buy and sell arrows with lifetime correspondence. Now, even still, we know that $6.95 may be difficult for some people to meet. You can structure a payment plan with the people at Pro Trader Strategies, but that's for a limited time only. So here's how to take advantage of that. As I stated, I teamed up with Pro Trader Strategies. They handle all of the promoting and marketing of my courses. You can email them right here, or you can call them directly, probably the best thing to do if you'd like to set up some type of payment plan. Or if you're set on becoming a student of mine and you want to start right away, that's the link at the very bottom. Unfortunately, that's not a live link, so you'd have to copy and paste that. But if you look in your chat box on the far right-hand corner of the GoToWebinar column, you see in the chat box they have posted a live link in the chat box. So all you have to do is click that on. It will automatically take you to the sign-up page, and you can be up and running instantly in just a few moments and start looking at all the rules to strategy number 4. Okay, so I'm going to leave all this information up here. I want to thank you for holding off on any questions, and I will open up the question and answer box right now. And remember to contact Pro Trader Strategies if you have any questions about price or about payment plans or about signing up right away. Okay, now I see we have a lot of questions. Let me just backtrack here so I don't miss anyone. Matt says, can you explain again when the setup is? Okay, well, I can give you the 2 rules. I can't explain the entire setup because that's only for the members of the course. But what we're looking for is a bar that closes in the top 25% of its range. Okay, so it doesn't matter if it's a tick bar, a daily bar, or a monthly bar. It makes no difference. So you take whatever bar you're looking at. Let's say you're looking at a chart right now. Take that bar and divide it by 4. Okay. The top quarter is where you want to see the price close. That's the top quarter of the range. Now, at the same time, that bar must close above the 50-period moving average. If you see these 2 rules in place, that is a very high probability setup for the market, whatever you're looking at, to go higher. Now, obviously, it's relative. If you're looking at a 2-minute chart, well, sure, it can go up higher, but maybe it'll only go up higher a half or maybe 1 point, because it's all relative to the time frame. If you're looking at a monthly bar chart, well, maybe it'll go up 10, 20 points. Matt says, well, what do you mean by range? Range just simply means the very top of the bar to the very bottom of the bar. Okay, if you're looking at a candlestick, that's the top of the wick to the very bottom of the wick. If you're looking at any chart pattern right now, there's tons of bars there, right? The range is if you take each individual bar, the very top to the very bottom, see what the price is, okay? The top may be 50, the bottom may be 48, so that range is 2 points, okay? let's see, the candle president is also lower. Why is that one no good? Well, I was speaking to conventional wisdom, the way people trade conventionally. And I don't really want to go into detail because that's another course which I'll be speaking about. But most of the rules, people just trade candlesticks blindly. In other words, they trade them off of the pattern. Oh, there's a morning star. Oh, there's a hanging man or a doji or a bullish or bearish engulfing pattern. And they take the candlestick pattern at face value and think that's all I need. There are a couple of other things you have to apply as well that really increase your odds for consistency. Now, if you just look at candlesticks for face value, you will have, as I stated, some winners every once in a while, okay? But there's no consistency. Trust me, I know. Someone taught me candlesticks back in the 70s. That's how long I've been trading. And, I've been trading them since then, and I used the conventional way of trading them, and I couldn't really make ends meet because there was no consistency. I'd have a winner every once in a while, then give it all back. It wasn't until I applied a couple of separate things that it really increased my odds for consistency trading candlesticks. But that's an entire class, so I really can't go into it right now. Just talking about strategy number 4 right now, okay? Let's see. Harold is talking about a specific chart. I'm sorry, Harold, I can't backtrack on this. If you can send me an email, and maybe I'll respond to you once I look at the specific slide. But I don't really backtrack on slides right now. Excuse me. Without showing the full strategy, you can continue to show hundreds of examples without any way to evaluate if this is true or a hoax. Well, trust me, it's not a hoax, because a hoax wouldn't be able to produce this many good signals. A hoax would mean if I generated these charts, but these are all real charts, okay? And you see that we've covered just about every market, every time frame, and every direction. Now, here are 2 ways. I understand, because there are a lot of people out there that are selling things that are faulty, that don't work. But look at the motivation. Not only did we share free information that you can start using, okay? We didn't, that shows you our intention. Most people that, try to sell faulty things or hoaxes don't really reveal anything. All they do is say, this works great. We're not going to tell you what it's based off of, but come on board. These are the stats going back 50, 60 years. You got to trust us. It's amazing. And, it costs $2,500 to become a member. All right. Look what we did. I shared with you 2 of the rules. I didn't have to give them to you, but I gave you 2 of the rules of the strategy. That's over, 30%, all right, of the strategy. You can apply that for free. So even if you don't want to become a member, even if you're not convinced and you think this is a hoax, well, guess what? You still got 2 great edges that you could start using for free. All right. So that shows you our motivation. We're not trying to slip a good one past anybody. We're trying to educate you. And we educated you with 2 things today. So if you don't feel comfortable, if you don't like what you've seen today, experiment with what we shared with you today. And I'm almost certain you'll come around and say, boy, these things actually do work. I've increased my odds for success just using the free stuff Steve taught me in that free webinar. You didn't spend anything today. We're not requiring you to spend anything. And then going into, if you would like to become a member and student of mine, most traders, and educators, their programs are thousands and thousands of dollars. And we have some programs that are like that as well, but they're very difficult and they're much more advanced. But look at the price we're charging. Very inexpensive, very reasonable. At the same time, we have payment plans. So if you can't come up with that sum, you can still put together some type of payment plan. So all of our motivation, all of our intentions are extremely honorable. And I think that says a lot about our company. Lastly, do a Google search. Go and see all the recommendations, all the testimonials of people that are trading this that have been successful for the very first time in their trading career. Okay? I think you'll find a lot of those. And mainly it's our intention. We're not trying to sell you a $5,000 program, and we're not just showing it to you and saying good luck. You're going to be my student for life. So this is really about education. I think I said that in the very opening sentence. We're an educational company. So I understand your fear. If you're afraid to come on board, then feel free to use what I taught you today and see if it makes a difference. I'm sure you'll be pleasantly surprised. But here's the only trouble. If you happen to come back a month from now and the price has increased, I'm sorry, you missed a really good chance to purchase Strategy 4 at a good price. Okay, let's see. Let's go to the next setup here. And where should we place our stop? Okay, well, once again, that's in the course. I can't give away everything for free because that's actually one of the rules. And you know, that would be like giving you an entire meal for free at a restaurant. So I can't really do that. I've got to give you a free appetizer, which is what I did today. I gave you 2 of the rules. But remember, many of our members have paid good money for the strategy number 4 course, and it wouldn't be fair if I gave away all the rules in a free webinar. Okay. Let's see. Britt asks, should the candlestick be green for a buy? Well, you know, Britt, I think that may be, I'm not sure what you're referring to. If you're referring to another one of our programs called the PET D, that's an entirely different format, so I don't really want to go into that. If you're just looking at the standard setup and colors of candlesticks, we don't rely on those colors anyway. All of our candlesticks are either hollow body, meaning white, or dark body, meaning dark brown or black. So we don't rely on colors unless we are using our program, which is the PET D. Okay. Donald says, how do we, excuse me, I'm losing my voice, so I apologize for my voice right now. How does one proceed when price is above or below the 50-period simple moving average on a daily chart, but is in the opposite or direction in a different time frame, hourly, 5-minute, etc.? Great question, and probably one of the most popular and common questions I get. And what Donald is asking is saying, like, you know, say you get a buy setup on a daily chart, okay, and you're above the 50. But on the weekly chart, you are below the 50. So what do? I said this in my webinar that I gave yesterday. And this is a technique just about every trader is taught. Okay, always use 2 time frames and use the 2 time frames that they must be in sync with each other to validate each other before you enter. Okay, now once again, in my nearly 30, or should say in my nearly 40 years of trading, I have found no consistency in this technique at all. Okay, I started just like most of you nearly 40 years ago using this, and the only thing this did was keep me out of a lot of good trades, because I would have a great setup, but it was out of sync with the higher time frame. So I wouldn't take it, and I'd wait for them to eventually get in sync, and by that time it was too late. I had, missed the profit. So I have found no consistency in this at all. I don't teach this method. I don't suggest it. I don't require it at all. Now, if you feel you must trade with this, please, by all means, go ahead, because remember, it goes against our philosophy to tell you how to trade. But there's no consistency in it, in my opinion, so why would you use it? Remember, as I stated in the beginning of this presentation, we want to keep our trading as simple as possible. And why overcomplicate your trading by adding another time frame? I've found no use for this. So it's up to you, but it's not required at all. Okay? Our rules say just trade the chart that the signal was generated on. If you get a buy signal in a 1-minute chart, that's the only chart you're concerned with. Don't care about what the hourly or the daily is doing. Why? They have nothing to do with each other. If you get a signal in a daily chart, don't be concerned with the weekly or monthly chart. It means absolutely nothing, in my opinion. Okay? Trade the chart that the signal is generated on, and that's all. Keep things simple. Okay? Evelyn asks, can you apply just this strategy to place a trade? Or you mentioned a need to meet other requirements. What are the other requirements? Are there other strategies? Oh no, in other words, what I gave you today are 2 of the rules to strategy 4. Strategy number 4 has a total of 5 rules. Okay, I gave you 2 of them. All right. Now I can't divulge what the other remaining rules are because it wouldn't be fair to the people who have purchased it. How would you like to go in and go into a restaurant and purchase a nice meal, and you go, boy, that was really nice, spent an adequate amount of money, but it was worth it. And then you see that I'm giving the same meal away for free. I mean, you feel like, hey, how come I had to pay, right? Well, that's the way it would be if I did the same thing and gave all the rules away. So I can't tell you what these rules are, but they're not another strategy. Okay, every strategy has its own nucleus of rules, and these are the rules that apply to strategy 4. Okay, I've given you 2 of them. There are 3 more. Strategies 1, 2, 3, 4, 5, they all have different rules. Okay. Albert asks, when was the 4 course recorded? I really don't know, Albert. I know we have different versions of them, but it wouldn't matter because it's pretty much the same. Nothing really has changed. And if there are any questions, once again, you're my student now for life, so it doesn't matter. You can ask me any question you want. If something seems out of date or if something seems in a market that you're not familiar with, you can just contact me. I'm going to be your mentor for life, okay? On what platform does this program run? Good question. Okay, let me go over the list of platforms that you can run this on. Remember, when we say running of the platform, we're only talking about being able to have the add-on which generates up and down, buy and sell arrows and indications, okay? Ultimately, my goal is for you not to rely on them, so it really would not matter what platform you have in the end. Those are only for educational purposes. But while you're learning, we want to supply you with these so that you know what to check for. Now, in the beginning, you can apply that with MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users. But they have to do something different with Thinkorswim because of the way it's programmed. So what we do is we take the free stock data from Thinkorswim and we just splice it and we apply it to a NinjaTrader platform that we give to you for free as well as set up for you for free. So there's no extra cost. There's nothing that you have to pay for or have to, worry about that. Boy, I don't, know how to do this myself. We set it all up for you with our tech support, and so it's no different. You'll see everything being generated for you. Okay. Albert asked, does this need the PET D for strategy number 4? No, I mean that's another platform and that's another course. The strategy 4 is, as you've seen in all these examples, has a very high level of consistency by itself. If you want to increase that consistency, yes, the PET D would help, but we're only talking about strategy number 4 today. Okay. Let's see. Joan. Oh, hey, Joan. Joan is a very good student of ours. She just started with us. Let's see. Joan says, I've been trading for over 7 years and have been a student of Steve's for the last 6 months. Yes. Steve is extremely knowledgeable, honorable, and approachable. I've finally been profitable and successful since purchasing strategy number 4. Please feel free to share comments with your audience. Well, thank you, Joan. Thank you very much. It's great to hear. We met Joan at a conference. We were asked to speak in Las Vegas. And, Joan had never heard of us, and Joan had been trading for a while. She shared with me that she didn't have a level of consistency. She had, just like most traders, myself included, when I first started out, she'd have some good trades, some good months, then she'd give it back, then she'd do well. And it's great to see that Joan is on that level of consistency. In fact, Joan emailed me about a month ago, or I think it was in January or February when the market was going straight down, that she was making thousands of dollars a day. And I was so happy for her. And I said, it's great, Joan. But I said, be careful, though. These are very volatile markets. But and all she was doing was applying our techniques with strategy number 4. So, Joan was not solicited. In fact, I didn't even know Joan was here today, but I'm glad to hear it. Britt asks, does it work with professional real-time? If you're asking in real-time trading, yes, it does. I use it in my real-time trading. If you're asking with a specific platform that's called Pro Real-Time, I'm not really sure. Remember, any technical questions or any tech support questions, feel free to contact Pro Trader Strategies. There's no obligations. You can, as I said, we're very honorable. We just want to educate you. And if you have a question, feel free to call them or email them, and they'd be happy to answer any question you may have concerning tech support or being able to apply it to certain platform or real-time issues, okay? Anything in terms of teaching or actually applying the strategy to your own trading as your mentor, you can contact me, okay? Donna asked, do you pay any attention to volume on the chart? No, Donna, just like different time frames, I stopped looking at different time frames and volume over 30 years ago. These are things my mentors taught me not to concern myself with. Now, obviously, if you are investing where you're holding something for, months, years, for long term, sure, volume will come into play. So will news. News will come into play. You should look at news. So will possibly different time frames. But that's only for investing. That's a totally different animal. What we teach here, most traders are not really concerned with their investing. They're concerned with intraday trading. They're also concerned with swing trading. If you're holding positions for minutes or holding them for weeks, there's no reason to look at volume. There's no reason to look at news. There's no reason to look at different time frames. Now you see here, I didn't say don't look at them. I just said there's no reason. If you feel you have to, then by all means go ahead. But they are no way required nor taught at specialist trading. They're just not a part of our courses. I stopped looking at them. Remember, I was a specialist on the floor. I made markets in 50 stocks. If anyone needed to, using conventional wisdom, if anyone needed to know about their companies. It was the person making markets in them, right? Well, I didn't know anything. Most of the companies, I didn't even know what they did. I didn't look at their earnings because my mentors told me to stop looking at that. It makes no difference. And I did just fine. I left the floor on my own and I went to manage money. I wasn't, desolate, or I didn't have to look for another job. I left at the top and got out. So, if you feel you must look at these things, go ahead. But trust me, take it from someone who's been trading for 40 years. I haven't used them in that long of a time. And so it's worked for me. Does this work on the Forex? Yes, it does. I showed you the example with the euro dollar. And even though this isn't a Forex type of webinar today, trust me, we have many students that apply this to their Forex trading. And look for some emails coming from Pro Trader Strategies, because we are going to have a college coming up in the next few months that specifically deals with Forex traders. So if you are a Forex trader, we're going to be applying many of our strategies to the Forex markets only in a college course that we have. So look for that announcement, okay? Donald is coming in. Hi, Donald. Yes, he's in one of our colleges. He says, much more robust and expensive than strategy number 4. Strategy 4 at this price is a bargain. Yes, it is. Well, in the college, you're getting a lot more information and you're getting personal mentoring. And sure, it is more expensive. That's where I said where we start to talk about our courses that are in the thousands of dollars. But that's a personal mentoring type of course. And we also give you information that we don't share in any of our other courses. But as Donald is saying, this is a great bargain because for this inexpensive price, you're getting a great strategy that is very, very consistent. Total value to have the strategy and your contact. Feel free to tell your students. Thank you, Donald. It's great to hear from you as well, and I look forward to seeing you this weekend in our next course, okay, in our next class for the college. Okay, thanks again, Donald. All right, it's just about time to close up here, but as you've seen, our intentions are merely not to sell you something and have you spend thousands and thousands of dollars, and then the minute you buy it, say, why did I spend the money on this stuff? It doesn't work. Trust me, I've been there. I know that. When I was struggling, I did the same thing. I purchased courses for thousands of dollars, and I knew the very day I looked at the instructions that this was going to be a waste of time and a waste of money. Okay, so I know what you maybe have gone through, and I know what you're afraid of. Now, my intentions are not to do that. As you can see here, we have an inexpensive course that even if you can't come up with that sum, you can have a payment plan for. And at the same time, I just gave you away 2 of the rules. So granted, if you don't want to become a student of mine, I totally understand. And I'm giving you 2 of the rules in good faith. So feel free to use them and see how they work for you, okay? But we're really about educating you so that there's enough room for everyone to be a consistent trader. It's not a zero-sum game in the trader world where you make money and someone loses. We don't look at trading that way. There's enough room for everyone to make money. All you need is someone to supply you with sound fundamental education so that you can become a part of the process. And that's what we want to do. We want to make you a part of the process so that you will put the power back in your hands again. Think of your trading. Are you relying on someone in a chat room telling you what to do? Are you going to a nightly signal service telling you what to buy or sell for the next day? Are you waiting with bated breath for the news to come out so you can tell you whether to buy or sell? These are all the ways most traders trade, myself included, when you first start out. And this is why most traders fail, because they basically take yourself out of the game. Once you have the sound knowledge, you'll have the confidence to put yourself back in the game and make your own trading decisions. And guess what? That's when you'll start to become consistent. So this is what we do at Specialist Trading. And I want to thank you all for showing up today. I want to thank my students who have joined us today. To my surprise, Donald and Joan, thank you so much. And I'm so happy for your success and for your learning. And as well, I look forward to all the other people that attended today to becoming students and members of mine in the Strategy Number 4 course. Thank you so much, and I hope to see you next time. Bye-bye.